Fundamental schmundamentals.
I agree.
Who follows those fundamentals?
Yeah, and those TV guys love them.
The damn TV guys. I wish I knew more of them.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
It's the Money Path Podcast with your hosts, Bob Iacchino and Mike Arnold. The news is funding secured for 20. Today's show is sponsored by Motive Wave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a casual conversation of news and the markets. Right? If you like Elon, you're no longer cool in the court of public opinion.
That's interesting.
Nothing held back.
So we were trailblazers again.
Yes.
We're not going to talk about a drug cartel at Gigafactory 1. We're not going to talk about that.
Oh, Jesus.
Have you heard all that, Bob?
No, I have not.
Oh, that's another whistleblower. They're essentially supposedly running drugs out of there and everything else.
Okay, come on. Is that a rabbit hole thing again, or is this legitimate?
No, this is legitimate. This is the same guy who's representing the other whistleblower. This broke yesterday. It's all covered by CNBC and everything.
Selling parts.
Like body parts?
And car parts, which are actually needed in Norway.
Selling livers.
Yeah, it's all crumbling around Tesla right now. It's boy, we haven't talked about Tesla in a couple weeks now. You know, last we had the funding secured tweet, and Tesla took off, and I'm getting all the phone calls. See, it's going to. You got to take all your money and put it in Tesla, and then.
Yeah, we had a guy on Twitter who I won't call him out because I don't want anyone to bother the guy. There was no reason to, but he just went quiet. Like the minute the funding secured tweet came out, it went up to what was admittedly his target. So he had a trade call on his Twitter account, and it got to his target. So I will give him credit for that. Although the way it got there, I mean, what's the difference? We don't care how ours get to our targets either, right? So he claims on his Twitter that he got out of this time, but he just went quiet all of a sudden. Just went completely dark. His Twitter's still there, but he's not reaching out. I don't see any tweets about it. Well, it's just kind of funny, and it's interesting because to me it's really something that's very sad. Because the first couple of cars, and considering that I've got a little patriotism in me, it's an American-made car. I feel a little bit sad that it's been squandered like this.
Bob, even Anakin Skywalker will fall and become Darth Vader. The universe has to be in balance.
Yeah, I mean, it's definitely self-imposed for him. It just would have been nice to see this American car company rise like that. It would have been nice. That's all I'm saying.
That was funny with all the people. I was in a rainstorm and my bumper fell off.
Is that true?
Yeah, there's a ton of them. We've had a ton of rain around the country in certain areas, except the West Coast where they really need it. People are like, I was driving in a foot of water and my bumper ripped off, and people are looking at it. I was like, it's held on by cardboard.
The car was not tested in the Midwest, flat out.
Is that part of the rivets that they got rid of before the last earnings call?
That was the welds. They got rid of
the welds. Yeah.
No, but it's the Tesla. It's starting to all crumble around Tesla and their narrative, and now the SEC's got multiple open investigations. They already had investigations that have finally come out that have been open, that were sort of not affirmed by Elon, but now they have multiple investigations. He's got, I think, 4 class action lawsuits by both longs and shorts on his funding secured tweet. because you had all the longs, you had people pile in because they're like, oh, it's going to 420. I'm going to make my money. And now they're all underwater. And then the shorts who had the cover on that, and they're like suing him. So he's getting it from all angles. They're now in CYA mode, full out. Stocks back down to 313. Critical level for me is still this. My critical level is 275, significant level. Until we break that.
Well, don't worry, Mike, because Elon said in the New York Times interview this morning, on his end, personally, there's a lot more pain to come. So we can only hope.
No, well, I don't want. It's just this Model 3 is a crap show. It's a poorly built car, and they're charged. There's going to be a lot of people who are going to have lots of cars that are falling apart very shortly, and that's what's really sad to me. So, separate from the stock, that's still I can't still believe it's like at 312 right now with everything going on. But it is what it is. You know what's going in the right way though?
What?
Walmart. They had earnings this week.
Yeah, I want to say that. So we've talked about this for a while, and the three of us have liked Walmart. And I've said before on this podcast and elsewhere that I am one of the people who now gets boxes from Amazon and Walmart, not just Amazon. And it's a couple things I want to say about it. First of all, it reminds me of like why do millennials, they hate Walmart so much because of the supposed big box destruction of the entry-level job and the small independent store and all that. I mean, Amazon is just as guilty, if not worse, of what they claim Walmart's doing. Number one. Number two, Walmart's going to be less susceptible to any extended trade tariff war from a perspective of, A, the consumer. They're set up to absorb that kind of a thing. So I don't think they raise their prices to the consumer. I mean, even if they do, in some cases, they're 20% below Amazon if you actually do the comparison shopping. So I don't think they're going to be affected that much. Number two, their online is really what took off that gave that blowout number. I mean, it was the stores too, but their online strategy is starting to work. So by my view of this, like that stock surge that Walmart got was completely justified. People sell that stock because of so many Walmart sold products made in China. It's way further down the road for China to be affected by this, way further. That's all I have to say about that.
Yeah, so they came out 129 versus 122 expected revenue, 128.03 billion versus 125.97 billion. Same store sales increased 4.5% versus 2.4 expected.
Mm-hmm.
So they obliterated their numbers.
They crushed it.
Yeah, and their stock took on, so it was trading pre-earnings like at around 90, and then it gapped up to over 100.
Mm-hmm.
Now it's trading 99.61. Holding this gap nicely, traded back down to about 98, but it's holding this gap nicely. It's actually filling the gap from earnings back in February. It left behind this massive gap, and it's going to look to fill that. I think it's going to run up to at least this 103 level to fill that gap it left behind.
It's a good-looking stock.
It is, yeah. This is not one I'd be. But these stocks, they just get. Well, should we get rid of quarterly earnings, Bob? That's the question.
See, I like that idea.
Bob Iacchino likes the idea.
I do. I actually liked my first Donald Trump tweet ever, and that's not a political statement. I just generally don't comment on any of this stuff. But I liked the tweet. I think it's a great idea. There are obviously some pitfalls, some negatives, and I would say one right off the bat would be that the institutional investor would get an even more dramatic advantage over the retail investor than they have now, because they would still go out and spend the money to interview CEOs before they took a big position, sit down with the boards, sit down with the CFO, and get kind of what like normal transparent information that comes out on the quarterly earnings call would become almost inside information. The further out you stretch those things. But Warren Buffett has an annual meeting once a year, and nobody says anything to him. Nobody complains about it. Nobody, they just stay in the stock. And I think, I'm an advocate of active trading, obviously, but active in a sense that maybe you don't hold things for 5 years, and you rely more on price action. I think price action becomes much cleaner then. I think in the short term, there's less volatility, and then around earnings, there'd be more.
I think that's we're already seeing major volatility around earnings, and it would just get way worse. We'd have even more.
Yeah, but it'd only be twice.
Yeah, but
maybe people could learn to stay away around earnings if there's only 2 of them. You almost can't stay away around earnings now because there's 4 of them.
No, I don't like the thing. I think it'd be less transparency. I think it would cause more issues than it would solve.
Okay, so let's kind of dive into that a little because it's important. Why not monthly then?
Because of the cost of companies. If something could come out with a little cost of companies, that our rules. If you had standard gap, see, you have to draw. Why not daily? Why not weekly?
Exactly.
Quarterly.
Exactly.
I think quarterly is the best option there is, and I also think if you want to reform stuff, get rid of this non-GAAP crap. Just make it standard GAAP accounting. All numbers are GAAP accounting. Produce quarterly. Therefore, nobody, it standardizes earnings, where right now you have to dive into them so much because, we have one-time write-downs, we have this, we have all this non-GAAP stuff that makes earnings even more confusing. I think just do quarterly GAAP. If you're publicly traded, quarterly earnings, GAAP only, and that's it.
I don't disagree with the GAAP part. I just think that fewer earnings reports allows CEOs of companies to not go, crap, we got earnings. Hey, get out there and email everybody and tell them we're not paying our bill till after earnings. Now, granted, that's an Elon thing, so it's a little bit exaggerated. But 90% of CEOs will tell you, yeah, we make some short-term adjustments because earnings are coming. And it's to the long-term detriment of the business in general, I would say. So I'd rather see CEOs spending time, and by the way, this would save money as well, in the same way that monthly earnings would increase costs, every 6 months would reduce costs, which I think is good.
Yeah, I just
disagree. It's fine.
It's the market's trade now with digesting just these already gaps are utterly absurd.
Yeah, and I mean you would have fewer gaps, but they'd probably be bigger. I don't know why anything is broken down in quarters. I really don't. I mean, it'd be something interesting to kind of look for. Maybe we could talk about it next week. I don't have an answer to that.
Maybe we should just go to annual earnings.
Yeah, I mean, that's what Buffett does with Berkshire Hathaway. That's what he does. Now, it's a little unfair because a lot of the companies that are in his portfolio release quarterly, right? But nobody ever sells Berkshire Hathaway. And Warren Buffett says, I mean, he's been quoted as saying that I don't worry about earnings reports, I worry about running the business. He goes, that's why we do it once a year. Now, I don't know why he's allowed to do it like that. I mean, maybe companies are, that's another thing I need to look into because I don't know the answer to that question. Are publicly traded companies required to report every quarter? I think that Berkshire does report every quarter. I just think that everyone focuses on the annual meeting because that's when Buffett talks and puts out his letter. So it's become kind of a thing that's, that's where the real information is, as opposed to just the earnings. But he's really got owners of Berkshire Hathaway stock convinced that, his quarters don't matter. And maybe that's the solution for some of these guys. Start acting the way he does and don't change the rules. Just go, yeah, I mean, we have a crappy quarter, don't care. I'll talk to you guys at the end of the year. Maybe that's the way to do it. I don't know. I like the idea because I just like less. I would like to see individuals not become buy-and holders, but become less active. Now, the media hates it, right? Because it's less for them to report on. I've only seen one media person this morning say, I think it's a good idea. It was Andrew Russ Sorkin, which is shocking because he hates Trump. He's so left and he hates Trump. But it was shocking to hear him agree with anything that the president put out. But the media hates it. They keep saying, well, it's less transparent. It's less transparent. I mean, sure, I guess it is. I guess that's true. And that would have to be worked on. But Then again, why not every month? Why not every hour? Why don't we? Did they just update their documents? Update their real-time income statements every single day. People can look them up somewhere. I don't know.
I think that would be a little
much. But the media hates it, which automatically makes me like it. Just being honest.
You're in the media.
I know. It's one of those things, man. I'm like,
well, what do you have to say about oil then?
Crude oil. I think the rally's over. I said as much on TD Ameritrade's closers panel this week. We have been tweeting out the video. I think the short-term rally is over. I think the turnaround sell-off, which is when refineries go into maintenance to begin to produce to get ready to produce winter blend gasoline. I think they're about to go into that. They've already started on a small scale, and that means the piling up of inventories because the refineries are not operating at a high level, or at least as high a level as they were. There's going to be accumulation of crude in the Permian specifically, but in shale in general, because they've run into pipeline capacity issues. They can't get them down to the refineries. So the crude oil is going to again start to accumulate there. And I think the summer driving season is over. And the sell-off because of the summer driving season ending usually starts in anywhere from mid-October to early September. So we're basically at the start of that period where it usually happens. So that's honestly all I have on that. I got one more thing on crude, and that's Iran has asked for a special OPEC meeting to discuss some of the members cheating on oil production in order to make U.S. sanctions work better. I'm paraphrasing. They didn't actually say that. They just said that, it's the first time Iran's ever complained about any country cheating on their production, and it's right around the time where U.S. sanctions are set to go into effect. So it's my guess that they don't want the countries cheating because they want the oil prices to rise so that the pressure gets on American citizens, and they turn on the president because of that. So lastly, I'll say I think Trump's going to release strategic petroleum reserves. I think if the price doesn't start to come down, which I think it will, but if it doesn't, if I'm wrong, I think he'll release SPDs or SPR oil into the market. He has a right to do it, and we don't really need it in there anymore because we produce so much oil on our own. We certainly don't need as much as we have. We've got hundreds of millions of barrels in reserve. And the Strategic Petroleum Reserve was started after the oil shock of the 70s. So, anyway, that's all I have for you, Noah.
So, no more bull market?
Short term.
Short term. Well, what's your long term outlet?
Well, long term, I think it's going to go back up because I think the demand's going to keep rising, and there's only so much oil they're going to be able to pull out without spending like crazy on CapEx, and I don't think they'll do that right now. The shale companies kind of learned their lesson of going too fast with that last time. So eventually it's going to go back up. But I mean, by short term, I should even probably say medium term because I'm talking probably 3 months. So I think for the next 3 months or so, it's going to be more sell rallies than buy dips.
You want to know what's so interesting?
What?
We have a double top in crude by 1 penny. It fell into the pattern.
Wow. Okay, so I did not know that. I didn't see the chart. But.
Yeah, it fell in, and it would need a close below to trigger. It would need a close below 63.40.
Gotcha.
But it is a 1 penny valid. Let me see what the targets are. Let me see. The full target would be which is fascinating. The full target officially 53.90, which takes us back to the breakout levels that we broke out of back last October, and it's also very key support from the beginning of 2017. So we just returned to the very key support at the beginning of 2017. Or resistance becomes support, let me put it that way. So, interesting pattern there.
Yeah, that's interesting because fundamentally it looks like it should go down. So I'm happy to see there's a pattern as well.
Oh, what's going on in economic news then?
CPI weaker this week. Came in at 10th weaker on most of the major releases, most of the major breakdowns of that data. So that was kind of weak. We had Michigan sentiment today come out the weakest level, consumer sentiment, weakest level since September, 95.8. Interestingly enough, the one-year inflation expectations in the consumer sentiment survey were unchanged. So in other words, there's going to be no inflation in a year. But the 2- and 5-year estimates are up in terms of what consumers think is going on with inflation. But yet the yield curve continues to flatten. We had the 2s, 10s at 33. The beginning of the month was at 26 yesterday. We had the 2s, 30s at 46. At the beginning of the month, 42 yesterday. So that continues to flatten. 10 years backing off. It's below 290 again, and has been holding there over the last couple of days. Overseas, we got the Turkey thing. You want to talk about the Turkey thing yet?
We can talk Turkey.
Okay, we can talk about the Turkey thing.
We can talk Turkey.
Turkish lira lost over 50% of its value. Actually, at its lows, it was closer to 83% of its value, which kind of implies that if it lost 100% of its value, it would go to zero. But for some reason, the math doesn't work that way, and I don't know why. I guess it would work that way, wouldn't it? Anyway, it had its weakest level versus the U.S. dollar in history. It was weakening exactly like the other emerging market currencies as the dollar strengthened. But then President Trump doubled steel and aluminum tariffs on Turkey. Official reasons were national security. What is the accepted reason now is because of there's an American pastor, I forget his name, who's being held captive by the Turkish government and trying to secure his release. They doubled tariffs. Now, they're not a very big aluminum producer, but they're the 6th largest steel exporter in the world, and 15% of that comes to the U.S. So it's a pretty damaging thing, and that's when the lira kind of accelerated its slide. There was worry about contagion to basically Spain, Italy, and to a certain degree Germany, because the Turkish banks were under pressure, and the Turkish banks have entered into a lot of debt deals with those 3 countries' banks. So there was worry about contagion there. But Turkey, while it's 4.4 times the size of Greece, is not as big of a crisis because their debt structure, the problem they have with their debt, servicing their debt, is that it's in dollars mostly. And their lira got so weak and is still weak against the dollar that they now no longer have the reserves to fund their debt and don't have any real way of getting it without some sort of a bailout. Turkey has talked about not taking a bailout. They're going to take care of it themselves. And if the lira goes back, their debt situation is actually fairly solid. It's not as negative as Greece's was. It is really more of a currency crisis than it's not a debt crisis. Greece was both. Greece was a debt crisis and a currency crisis. So it's not as bad as Greece, even though the economy is bigger. I don't believe there will be a contagion. If there is, I think the contagion will be contained, if that makes sense, to just a couple of banks, and I think they'll have no problem getting the funding they need to take care of that. But they put some pressure on the markets.
Yes, it definitely has put pressure on the markets. What's your take on the U.S. dollar then? Because it's broken out of its key little resistance area, rising weekly rotation zone, which was we just had a retest now, which we retested prior resistance of about 95 becoming support. We're trading 96.25. Dollar's still looking bullish.
Yeah, I'm still bullish on the dollar, and I have been for a while. Again, I've said that on TV and elsewhere. I'm definitely still bullish on the dollar. I don't see a reason for the dollar to go down. And I hate when that's the thing. I really do. I hate when that is actually the thing. But what we saw in the equity markets was when there was negative China news, or then when this Turkey news started, the market would go down. When there was positive news, the market would go up, as we saw 2 days ago or yesterday. Low-level trade talks between the U.S. and China are going to start again, and markets, Dow was up 300 and some odd points, et cetera, 400 points on its highs. Anyway, when there's bad news, the market goes down. When there's good news, the market goes up. That makes sense. But when there's no news, the market goes up. And that tells you that the undercurrent is still very bullish. Earnings were still very good. The earnings scorecard has been very, very good, although still it's been lower than I can tell you the two negatives I take from earnings there. But if you look at the stock market, money's going to flow into it because it's just the best house on just an average block. The rest of the world, save for maybe the UK right now, is kind of suffering from an economic perspective. Nobody's in a complete crash or even approaching a recession, but their data has gotten a lot softer, a lot quicker than the data in the U.S. has. So I don't see any reason for the dollar to turn around right now.
There, yeah, it's got the nice technical pattern too.
Does it?
Yes, I mean it's just rising weekly rotation zone, retesting key support, rotating back up. And we don't have really a clear path, but based off the weekly stuff, there's no real stopping point at this point. There's no real key resistance until you get back up to the 99 area.
Mm-hmm.
So it could run. It could run. So what's your overall take on equities then? Are you still...
I'm bullish, but less bullish than I was. What's that?
Yeah, that's what I was wondering. How on your bullometer?
Yeah, I'm bullish, but less bullish than I was. And so I haven't said it a lot because people don't ask me a lot. But to me, I probably had in my mind about a 12 or a 13% target on the S&P for this year. I'm probably more like a 9 or a 10 now at the most, more single digits. And I'll tell you why. So, when you look at the earnings scorecard so far, and it doesn't include this week because I don't have this week's figures yet, but the S&P 500 as of last Friday had about 91% of the companies having reported. I'm sorry. Yeah, about 91%. And it was a 23.5% blended earnings growth rate. That's the second highest since the third quarter of 2010 when it was 34%. But the first highest was last quarter. So what does that mean? Well, the people who were talking about peak earnings last quarter, myself included, aren't wrong yet because it is lower than last quarter. So if that was the peak, this one's lower. The next one could be lower. The next one could be lower. Then that would be the short-term peak in earnings for this particular cycle. The second thing is, while 79% of those companies have beat on EPS, 74 of them have beat on revenue. Those are pretty high marks as well. The 74% beating on revenue, if it stays that way, would be the highest since FactSet has been keeping those records. FactSet.com is where I get the earnings scorecard from. And it's free, by the way, if anyone wants to look for it. If that remains 74%, that's going to be the highest since they started keeping records. But of the 74 companies that have given guidance, 55 have given negative guidance. So the two things I see as negative is that this potentially confirms that last quarter was peak earnings, and the companies are getting less optimistic. And then there's another thing that they had in their report that was super interesting. Of those S&P companies that have reported, the companies that get 50% of their earnings from inside the United States, 50% or more, had a 22% blended earnings growth rate. Those that get less than 50% of their earnings from inside the U.S., meaning they're more global, 24, actually it was 26%. So if the tariffs are going to hurt profits, it hasn't happened yet. The companies that were involved in global trade did better than the ones that were involved almost purely domestically. So if the tariffs continue, that's going to bleed into the next quarter of earnings and then the next. It was not necessarily in this one.
Gotcha. Wow.
That's a lot.
That is a lot. That's a lot of very valuable information. I just don't know what to do with it. But it's
nothing. You just look at the charts. That's all. We don't do anything with it.
That's all I can do.
Yeah, we don't do anything. That's all I
can do. I was just looking at a chart of the S&P E-mini, still holding at the upper end of its weekly rotation zone. Although if we have another down dip, it will form a sloppy head and shoulders. So, so I'll just keep it that we'd only have a pullback. That wouldn't be that I mean, that would only be possible pullback to about 27.40. Right now, we're trading 28.45, so we're not talking a major, something major. It still has not gotten above its highs set, at least in the futures, back in the middle of January.
Right.
So where are we? What's the NASDAQ looking like?
We were only like 1% off from the NASDAQ all-time highs yesterday when the last I looked at it. The S&P, we were like 1.4%, like 1.4% away. But the Dow, we were over 4% away from the highs.
Yeah, I'm just looking at the Dow. We're way, I mean, the weakest of all these is definitely the Dow.
Yeah.
Because we're nowhere near the highs set at the beginning of, or middle of January, whereas the NASDAQ's almost back there and the S&P's not that far off. That Dow's got some substantial ground to make up.
Yeah.
But that's what, anything on the radar screen for next week we should be aware of?
Well, this weekend, an appeals court in Turkey is taking up the case of that American pastor. So it's really interesting to see how that plays out, because if it's true that those tariffs are the reason for the lira's excessive fall, and I believe that is true, and if it's true that they're almost a direct result of that pastor not being freed. By the way, according to news reports, Turkey reneged on a deal that they were supposed to release this pastor after Israel released a Turkish woman who was accused of spying. Israel released the woman, and then Turkey did not release the pastor. So while it may not necessarily be tradition for a president to use tariffs or something like this, it is probably in a weird way justified. And again, I'm not making a political comment. I'm just saying it's not this tariff for that reason argument isn't that far-fetched. So if the tariffs are because of that reason, then Turkey could potentially end that by just, and we all know some of these countries, you know, their justice system isn't necessarily transparent. So it is possible that the government puts a little bit of pressure on the appeals court. They can save face by saying, you know, the pastor went through our due process and he's being released, you know. And so if the tariffs are because of that, then they theoretically could come off next week, which would stabilize the markets and allow the markets to rally. And then as well next week with the you've got the start of, I believe it's next week, the start of those low-level talks between the Vice Minister of Commerce in China and the Undersecretary for International Affairs in the Treasury. So pretty low-level talks, kind of like when OPEC agreed to agree to a production cut. It's so this particular talk is like supposedly agreeing to talk further, is what these talks are supposed to be achieving, an agreement to talk further. So I would be paying close attention to those two things more than anything.
All right. So we'll be tuned in to the news.
Please tune in.
We'll tune into the news.
So I don't know if I keep that drug thing in the show, but it had to be.
If it's in the news, keep it in there.
It is. It's legitimate. Did you see that though? So that came out, and the attorney, it was put out by the attorney for the whistleblowers, along with the whistleblower, and so they didn't mention the name of the cartel. And so Elon comes out and says, it's not like he names the cartel, then the lawyer comes back, we didn't mention which cartel it was, but you seem to know. Like he got the cartel right that was not named in the news sources.
All right. I'll talk to you guys later.
All right.
See ya.
Bye.
Oh, great show.
All right. I got to run over to the vet.